Welcome, folks. I hope everyone is fine. This is the 30th March 2024, Wednesday, and end of the session. I'm going to make the daily recap so that you can understand how was the day. Everything was beforehand. I was in live and I explained everything in my life. Okay, so here is the daily recap so that you can justify yourself what you have done wrongly. I will start from the beginning. Today is the Wednesday. Wednesday is the expansion day. Okay, that means market will go toward your weekly liquidity. Where is your weekly liquidity? Here, this sell side liquidity and this sell side liquidity is your target. If you missed the first two video, that means Monday accumulation video, Tuesday manipulation video, please watch them. I will add the end screen to the Tuesday manipulation video link. So you will at the end of this video, you will get that to the end screen video link. Okay. After the manipulation, Tuesday manipulation, Wednesday it will be the expansion. Okay, so you will see the expansion. You have to understand that the Wednesday price work actually like this way. It will go a little above, went lower, retrace, lower, retrace, lower. That should be the expansion day. Okay, so let's go to the price action. First, I will go to the London session. This is the London session. I just marked it through that two blue line. Okay. At the same time, if you remember, this is that entry favorable gap. So price came to that entry favorable gap. Now it's time for the expansion. Let's go to 1 minute chart. So over here, this is that London session. Market started from 3 a.m. in the morning because of the daylight saving. So over here, when price came here, first thing you have to mark the liquidity. You can see this low and that low, they are relatively equal lows. So that should be your sell side liquidity. Okay, and you can see this is relatively equal highs. Market has taken that relatively equal highs. At the same time, it tapped to the new day opening gap. Then it broke lower. When it went lower, you have to look for your market structure shift. So here is your market structure shift. Market has taken the buy side liquidity over here. This is your liquidity taken. After taking the liquidity, market broke lower strong way. So here, now you have to look for two parallel gap. Where is your two parallel gap? This is your first parallel gap over here. That means the entry parallel gap. Okay, and here is your breakaway gap. This is your breakaway gap. Just a second. Yeah, here. This is a breakaway gap. You will take your entry to that specific candle over there. You have to take your entry over there. Your stop loss will cover this parallel gap. And where is your target? This sell side liquidity will be your target. Now you can see later price actually take that sell side liquidity. You don't need to hold for that big run because this is a huge liquidity. Okay, instead of that you can go for the last fair value gap from 1 minute chart, or you can go some sell side liquidity around that area. Okay, it's up to you. The way you want to trade, you can trade, you can target, or you can take some partial. Just manage your trade the way you love to manage. Now I actually took that entry and then I closed the trade. I took re-entry to that inversion fair value gap in my live. Okay, I was in live and I showed that entry over here. That was my entry over there to that inversion fair value gap. My stop loss was just above that high and I have targeted that low. Okay, this low. So that was the trade from London session. There was two option. There was two opportunity to take the London session entry. It's up to you which one you prefer. Okay, so that's all for the London session. I don't want to explain whole price action over here, but you can see actually the price was pretty good over there. So from 3 to 6, that is your London session, and that was the setup. Now I will go to the New York AM session. Still, what is my bias? My bias is bearish. I'm going to mark the New York AM session. New York AM session start from 9:30. Okay, so here is your 9:30 and it lasts until 12. Okay, so here. So this two line is your New York AM session. You can see market broke lower, right? When it came here around 9:30, price was just over here, right? Exactly over here. Before this line, okay, market didn't print that price yet. So you can see what do you have. Market has taken that buy side liquidity around that area. Market has taken that buy side liquidity, market structure shift. This is the fair value gap. Price trade that fair value gap. It went lower. It has made another fair value gap level over there. So this is the entry fair value gap over here, or the first fair value gap actually. So this is that fair value gap. So I'm going to go 1 minute chart again. Okay, so over here you can see price came to that 50-minute fair value gap. At the same time, it has taken the liquidity around that area. Same setup. Okay, I'm just going to show you the same setup again and again. How can't you be so obvious? Market has taken the buy side liquidity. There is your market structure shift over here. This is your market structure shift. And where is your first fair value gap? There is your first fair value gap over here. This is your first fair value gap. And where is your breakaway gap? This is your breakaway gap. This candle low and that candle high is your breakaway gap. Now you have to take your entry when price came to that fair value gap, exactly over here. That should be your entry. Your stop loss will cover the consequent crossment of that breakaway gap. Why you are not going to cover the whole breakaway gap? Because you can see the breakaway gap is huge here, right? The breakaway gap is huge. So you don't need to cover the whole breakaway gap, just cover the consequent crossment of the breakaway gap. And you have to believe that market is not going to break that consequent crossment and it will stay below. Sometimes you will be stopped out around that area. Trust me, brother. Sometimes you will be stopped out, but be happy with that. Try to take a re-entry. But you just can't take more risk over here. If you ever see the breakaway gap is too big, just cover the consequent crossment. Now this is the time to look for the liquidity. Where is your liquidity? Come over here, see this low and that low. They are relatively equal lows. So this relatively equal lows is your target over here. So that is your sell side liquidity. You should target that low. Now over here, if you want to take that entry until this low, you are done. Okay. Now if you want to take and hold it for $79, nothing wrong with that. But if you ask me, I will tell you to close your trade around that last fair value gap. Okay. Over here, this is the last fair value gap from 1 minute chart. My advice is to close your trade to that last fair value gap over here. So your trade should be closed around that area. So this is the morning session entry. I outlined it in my live, so this is not hindsight. If you missed my live, then you can watch the daily recap and you can understand why and how you will trade the obvious expansion. Still guys, I'm bearish. Why I'm bearish? Because today is Wednesday. Every single time market will go higher, I will see this opportunity to take sell. Okay, so this was the first entry and you can see I'm gonna remove it from my chart. Market went higher, right? It is still inside the New York AM session. Now when it is going higher, I'm gonna remove this 1 minute last fair value gap because it has taken that extreme sell side liquidity. So this sell side liquidity has taken already. Now market, after taking the sell side liquidity, it went higher. Look at this run. Where did it stop? 1 minute last fair value gap. Just look at this 1 minute last fair value gap. How beautifully it stopped over there. After stopping over there, you will look for the market structure shift. Where is your market structure shift? This is your market structure shift. After shifting the market structure, sorry, you will look for your fair value gap. Where is your fair value gap? Here is your fair value gap. This is your fair value gap. Now, if you want to take that entry, nothing wrong with that. From here, your stop loss will cover. Your stop loss will be here. Around that area, you have to cover the very small fair value gap over there. So something like this. This fair value gap should be covered because this is the last fair value gap. And where should be your target? look over here. What do you see? See this fair value gap from a 1 minute chart here. Last fair value gap from 1 minute chart. You can target that fair value gap as your sell side liquidity. Okay, so over here around that area. Now again guys, it is huge 67 handle. You don't need to hold your trade until that area, and you can see it actually didn't take that low. It never take that low actually. I mean that fair value gap, it never reached over there. Instead of that, it went to the 1 minute entry fair value gap. So in that type of situation, maybe you will take a partial around that area and then you will be stopped out to the break even. So until here it's 42 handle and it's not small, okay, but I'm not encouraging you to take that entry, because you see this is not an immediate reaction. Market takes too long to come back again to this fair value gap. Okay, so I'm not encouraging you to take that entry. Instead of that, you can actually wait here more, and then you will wait for the, you know, the what to say, the mitigation block. Okay, here is the part of the mitigation block. You see here, this is actually the mini S&P below here. Okay, this swing high has taken by that swing high, but over here it failed to take that swing high. So this is the SMT. Okay, the SMT is clear. When I saw this SMT, so high, low, lower high, the lowest down close candle is my mitigation block. So over here, that's my mitigation block. When price closed below that mitigation block, this is the first time when price closed below the mitigation block, you have to take your entry over here and your stop loss will cover. Just you can put it that high, or you can cover the mitigation block only, and you can go either for this low or for that low. This is also the relatively equal lows, you can see. So you can target over there. Still it is near about 39 handle, or you can target that 1 minute last fair value gap. Instead of the 1 minute entry fair value gap, you can go for that 1 minute last fair value gap, and at the same time you will take some partial. Maybe then you will be stopped out, you know, you will trail my your stop loss and you will be stopped out. Okay. So that was another opportunity from today morning session. Now still guys, I'm bearish. Okay, as I explained, if you don't understand the narrative, please watch the narrative video from my channel. I have already uploaded a lot of videos which is useful. You can watch them and you will understand why and how you will trade in a specific way. Now I'm going to the PM session. Okay, so PM session actually start at 1 p.m. So I'm gonna mark 1 p.m. and it is close at 4 p.m. So here is the 4 p.m. Look over here. Before the PM session, price was over here, right? You have the sell side liquidity. You know market is going to take that sell side liquidity. At the same time, see if there is any higher time frame for point of interest or not. Okay, so you can see this is the fair value gap from 15 minute chart. So this is the last fair value gap from 15 minute chart. Now I'm going to 1 minute chart again. So here is my 1 minute chart. Okay, so here this is the first time when price reached to that 50 minute last fair value gap. When it has reached over there, you have to look for the market structure sheet. Where is your market structure sheet? Look all of this price action. There was no market structure sheet until this low. Okay, so here when this low is actually shifted by that low, at the same time market has taken all the buy side liquidity here. Okay, there is no buy side liquidity. After taking the buy side liquidity, a very immediate reaction. Market just went lower. So this is your market structure sheet. After shifting the market structure, you will look for the fair value gap. Where is your fair value gap? There is your fair value gap. You will take your entry over there to that fair value gap. Your stop loss will cover maybe that swing high. Nothing wrong with that. Where will be your target? Now, look, these lows are taken by that low. See? So I'm talking about here. This lows, relatively equal lows by has taken by that low. So this is the shallow run. So if you ever see the shallow run, that will be your obvious liquidity. That means market is going to take that obvious liquidity, right? So that will be your PM session trade. And you can see how beautifully it worked over there. And I took this entry to my this account actually. So over here, I took that entry and I closed it actually over here below those lows. Still, I was profitable for near about $1,200, and I'm happy with that. But yeah, in short, that was today's recap. Why I was bearish because of the narrative. You have to understand the narrative. Without narrative, if you trade, that's kind of, you don't know anything what it's going to do. You don't know where market is going because you don't know the direction. You have to know the direction. If you know the direction when market is going higher, you won't get panic. Okay, you are not going to think, okay, market is now going higher for maybe some kind of buy side liquidity. No, it's not going to do that. It's going to fall again. Every time market is going higher, it's going higher to take the liquidity. After taking the liquidity, market structure shift, fair value gap, boom. I explained this entry perfectly to my live with every single level. Okay, here, then I marked the order block. That was my order block over there. That was my actually the order block over here. Then you can see the mean threshold of that order block here. Body never closed above the mean threshold of the order block. Okay, so this is the mean threshold or the 50% of the order block. So here, press trade that mean threshold, then boom, came here, take that sell side liquidity. At the same time, it just made relatively equal lows, and I believe that this is going to be going to be taken. Okay, this low, that low, they are going to be triggered tomorrow. This is for tomorrow. Okay. So overall, this is the recap from 13th March 2024. I believe that it's going to help you a little bit. Why I am bearish one more time? It's because of narrative. My weekly analysis was telling me that over here, this is the weekly chart. So my weekly analysis was telling me that market is going to take that lows. See this relatively equal lows? Market is going to take that relatively equal lows. That's why I was bearish, and today Wednesday, tomorrow, Thursday will be that expansion day. That's why I was bearish today, and tomorrow I will be bearish as well. And I was in live. I explained everything in my live. So if you can actually join to my live. You will learn so many things. If you are new, don't forget to subscribe to my channel. Please don't forget to leave a like. Okay, just give me a thumbs up and share the content if you want. So until tomorrow, cheers.